So it's important for us to be able to attract global capital. We need to set the house in order. That's very critical. Unless until we are able to set the house in order, then it is going to be very, very difficult. Window dressing is helpful, but it cannot really help significantly because investors are going to find out. There is a lot of things that needs to be done. There's a lot of homework that needs to be completed before we can start really getting global capital at a global scale.
Hello and welcome to Macro Decode. At the Bharat Innovates 2026 event in France, the Commerce Minister requested investors as well as private equity and venture capital funds to invest in Indian startups. Globally, private equity funds have been pumping in money into AI startups. In this context, let's talk to Thillai Rajan, Professor of Finance at IIT Madras, to understand why Indian startups are lagging in attracting venture capital funding. Welcome to the show, sir. India is the world's third largest startup ecosystem. Can you compare the venture capital funding received by Indian startups vis-a-vis global startups in 2025? How is the capital availability for the US and Chinese startups when compared to us?
As you know that venture capital investment is fairly lumpy in nature, and I think it is always better to really look at a time frame rather than a particular year. Making an inference based on trends in any particular year can be a little misleading. So instead of just looking at what's actually happened in 2025, I also looked at what basically we can look at it in the last 10 years. And the last 10 years is also fairly momentous as far as Indian startup ecosystem is concerned. But I still think that there is significant gap in terms of quantum of funding that is coming to the Indian startup ecosystem. Broadly, the US startups have been able to attract funding to the extent of about $2 trillion over a 10-year period.
Right.
China is half of that, it's about 1 trillion. And India is 0.4 trillion. So that's a significant difference in scale that we are seeing as far as the startup funding in India is concerned. If we also look at the Indian funding, about 0.4 trillion is also considering the debt funding. So if you remove the debt funding, so the actual equity funding that has gone into the Indian startups is only about 0.2 trillion to 0.25 trillion. And this is significantly lower as compared to what we are seeing in the US or in China.
Okay. Of the global private equity funding that is happening, what would be our share?
So really global private equity funding largely rests on the top 3 or 4. If you really look at the US, China, India, UK, and to a certain extent, maybe Israel. I think it's about 5 trillion if you look at that number, and India is about 0.24 trillion. So that's a share that we are really talking about. It's about, I would say, 10%.
If you look at 2025, the numbers look even smaller, somewhere around 1%. Am I right?
So 2025 again is a very different kind of an year because
Okay.
we are really seeing a major surge of artificial intelligence, the AI related kind of company that have received significant investment. They're just maybe 3 or 4 companies that have received substantial amount of funding. And these companies are essentially based in the US. Like for example, looking at Anthropic, you're looking at OpenAI. They have substantially distorted the funding that's actually happening in the ecosystem. The US in 2025 received about $124 billion. And that's a large sum of money, primarily driven by AI. China had received about $17.2 billion, again, significantly driven by AI. But if you really look at India, India has got about $1.35 billion. So as you rightly mentioned, yes, India had received about 1% of the global startup funding that has actually happened in AI. And AI has been the only major driving factor in 2025.
As you rightly pointed out, the AI startups in India have not been able to attract so much of funds. What are the gaps that are there in the Indian startup ecosystem? And especially when we talk about AI startups, that, they are not able to attract the capital.
See, any innovation, the first mover captures the lion's share. Either it could be the market or it could be the investor interest and so on, because they have a significant lead. The leaders in AI so far, at least, has been the US in terms of OpenAI, in terms of Anthropic, and some of the other startups. China, in some sense, has been able to catch up, but India is a little far behind. What we have been trying to do is not really do something very fundamental the way it's been done, but we are trying to see how we can capture India specific models. So to a certain extent, the breakthrough initiative that is actually happening in the Indian context, I would not say it's very deep. We are trying to do something that's very relevant on some of the overseas technologies. Now, if that is being the case, I think it is maybe very difficult to get the investor interest to pump in money. Right? Investors' interest is largely in terms of looking at something that's groundbreaking, that's original, and
Right.
something that can really capture the interest of people and the users globally. So that's
Correct.
possibly is the main reason. So that's a challenge. How do you really scale up? How do you really beat some of the global players? That's a big challenge.
So, as you rightly said, large foundational models like OpenAI or DeepSeek or even Anthropic, those are the ones who have been actually attracting large funds. Why can't India look at, large foundation models, or are we, just looking at enterprise AI or, language models, that will be our core, will that be our core area, or will we also look at foundation models?
Indian startup ecosystem has been largely, in some sense, driven by the frugality mindset and the frugality model. I mean, we are very efficient as far as the capital utilization is concerned.
Right.
But in some of the newer technologies, frugality goes so far, but only no further. I mean, we need to be able to really compress significant development in a very short span of time, because everybody realizes that technology is leapfrogging so much. Any delay can make you outdated. We cannot really pursue the traditional paradigm of minimizing capital, minimizing spending, and then trying to achieve the same amount of output that is available for companies who have literally infinite amounts of capital. So some of the companies that we're really talking about, they are able to access capital, large amounts of capital at very short duration. That
Right.
is largely because there are investors that are available who are able to pump in that kind of capital. In India, we don't have that kind of investors who can pump in billions of dollars at very short notice. Here, even to raise a few crores, it takes about half a year. It takes about 6 months for startups to raise that kind of capital. So then, a new investment paradigm has has to arrive in India to be able to support these
Yeah.
kinds of hugely capital intensive startups.
So we have a long way to go. But there is also one question, usually people are worried about, like, whether this AI boom that we are seeing right now and the money that is going into AI, will we see a similar situations where, we saw the dot-com boom and the bust happening in 2000s? Do you think, that kind of a situation is likely now, because we are seeing a lot of funds going into AI?
So that is what many predictions are indicating. But we also know that nobody holds accountable for people who are predicting the predictions don't come true. Predictions indicate that the capital is significant. It is possible that there is a euphoria. There is what
Mhm.
people may call as irrational exuberance. That's what
Right.
when people called about the dot com. But look
Mhm.
at it, dot com, after the exuberance died, it took about 20 years for the impact to be felt. Whatever is
Exactly.
actually happening in the internet economy was seeded in the dot com boom. So 15 years later, when people are able to develop the benefits of the e-commerce and all of that, it's not that it happened overnight. It actually happened in 2000, 2002 period. So similarly, there might be significant instances of AI-based companies, many companies not able to survive. Today, we are really looking at three or four fundamental models in the AI, and each of them are trying to capture their own market share. But
Right.
ultimately, like in the case of search engines, the market may not be able to support so many companies. The market may possibly support a couple of companies. And which couple of those companies, and that only we will know. But the remaining companies will obviously wither down, will obviously die. But that doesn't mean that the impact will not be realized. The impact will be realized in some other form. For example, people who are involved in developing these technologies may be able to create some spin-offs that may result in benefits of a different kind. So technically, yes, I think there could be some of the investments failing, but the benefits can actually occur in a different form through some other ventures.
Right.
Those we may not be able to realize if this boom does not happen. If this boom does not happen, some of the spin-offs that might come out later may not actually come out at all. So this is important. The process of creation and destruction is an essential part of any new industry that's emerging.
So, coming back to PE and VC funds, in recent times, we have seen a large number of PE and VC fund exits, especially among the startups. In the past 5 years, overall, how has been the private equity and venture capital inflow as well as outflow from India?
See, what has significantly happened in the last few years, there has been a significant amount of domestic capital that has actually been raised. If you really look at it 10 years ago, about 90% of the capital that used to come in the venture capital ecosystem has been largely from overseas investors. Now the pendulum has actually moved in the right direction in terms of many investors have been able to attract capital from Indian contributors. It could be corporates, it could be family offices, and so on. So, to that extent, there's a right movement in terms of getting capital from the Indian investors. It is still not very significant, but it's substantially better than what it has been previously.
Right.
And if you are looking at capital outflow, Indian ventures have not been able to provide very satisfactory or profitable exits. So yes, I think capital flow to Indian ecosystem has been positive, but then there has been a little rain shadow regions. Unless until there is scale up and growth funding available, the early investors might not be able to exit. The ventures might find it difficult to scale up, and without scaling up, it may not be possible for the ventures to survive as well. So it's critical that we need to have more capital flowing in the scaling and the growth stage.
As per reports, many Indian VCs are now investing in US-based AI startups. What does that tell about the opportunities that are available in India versus the US?
I think capital does not have any boundaries. Capital is truly global. Capital finds a way to reaching out to opportunities that gives them the best return. As the Indian investors get comfortable with this kind of asset category, which is the startups and so on, they are not going to stick only to the opportunities that are available in the Indian market. They are now going to start looking at opportunities available globally, right? And that is necessarily the flip side of the coin. Now, when people are getting the awareness, they open their eyes and then they find it, hey, I really don't have to restrict myself to Indian ventures. I can really invest in global ventures. I mean, because ultimately I'm interested in ventures, I'm interested in returns. Why should I restrict myself to the Indian ventures? And that's what we are really seeing.
Yeah. In this context, I think we need to talk about what Commerce Minister Piyush Goyal mentioned in the event in France. So he says that the investors will lose out an opportunity if they do not invest in Indian startups now. And he has also requested the global private equity funds and the VC funds to invest in India. How developed is the Indian AI startup ecosystem, and how prepared are we to attract this kind of a global talent?
Very rarely you have the government of India being the investment banker for Indian startups. They are now trying to see how they can get access to funds and so on. So that's a good thing. The good thing because today the government has realized that in our pursuit of a 5 trillion economy, startups are going to play a very important role. And unless until there is a facilitation that is being created, we will possibly not able to achieve larger economic, social, and developmental goals. Having said that, I was also mentioning capital has a way of finding its right opportunities. So it's important for us to be able to attract global capital. We need to set the house in order. Okay, that's very critical. Unless until we are able to set the house in order, then it is going to be very, very difficult. Okay, window dressing is helpful, but it cannot really help significantly because investors are going to find out. Okay, and that's there is a lot of things that needs to be done. There's a lot of homework that needs to be completed before we can start really getting global capital at a global scale. It could be in many form. It could be in terms of creating institutions. It could be in terms of government policies. It could be in terms of opportunities that the Indian startups get to be able to access the market. All of these things become very important. So if the government could do a lot more in terms of providing market opportunities to the Indian startups. So if the initial market opportunities that the government can provide to the Indian startups are significant, then naturally the Indian startups will be able to scale up much faster. And when the scaling up process is much faster, naturally the capital will find a way through to support these kind of startups.
So, if you are advising the policymakers, what reforms would have the greatest impact in attracting long term global capital into Indian innovation?
So one is the reforms in terms of facilitating capital flows. It could be in terms of regulation, which facilitates capital flows into the system and which also facilitates people to be able to repatriate capital. There are issues like tax and all of those things. It could be in terms of involving them in various projects that the government is doing in the country. Right? You talked about Bharat Innovates. That's a significant market opportunity that the government has provided to the selected 120 odd startups, giving them access to the global markets, giving them access to global buyers, giving them access to global investors. And this should not be seen as a one-off event. That's number one. Second, I think the focus has been largely on deep tech innovation, but Indian startup ecosystem in a way is very different. There are several opportunities for the non-tech startups as well. If you really look at some of the top sectors that are attracting startup formation today, that is in sectors such as construction, food and beverage. So opportunities prevail even in those sectors that are apart from deep tech innovation. If you are able to create opportunities that are something very relevant to the Indian context, to the Indian entrepreneurial ecosystem, they'll be very effective rather than really following what is actually happening globally. If you really play the game that's actually being played elsewhere, it's going to be very difficult for us to be able to create an impact.
So, how much important is having a policy stability and an investment friendly tax regime for for the investors to come into India?
Oh, it's very important. I think, in a way, I think we should acknowledge the fact that there's been significant policy continuity. The policy continuity, as far as supporting startups, has been consistent. There has been no other policy initiative that has really encompassed so many departments and so many ministries, so many public sector organizations. So today, if you look at it, each and every state government, at least about 20 to 25 state governments, has a significant thrust on startup policies. What I think is needed at this stage is to tie up a few loose ends in terms of ensuring that the investments are favorable as far as the investors are concerned, a mechanism where the investors can easily get back returns from the investment, and the entrepreneurs are not forced to get into a situation where they will have to place significant amount of time and energy into seeing how do you really optimize tax payments, how do you really ensure that the investments that are coming in is actually going to the investment into startup rather than paying taxes and all of those things.
Right, right. Yeah. So, frugality in investing in deep tech and AI, that is probably, a big challenge for Indian startups. And another thing you just mentioned about like how, the tax regime also has to be more investor friendly so that, the investors would probably feel that, we can come in and returns would be good enough. That was Mr. Thillai Rajan, Professor of Finance of IIT Madras, talking to us on the startup ecosystem in India. And he was also telling that we need to do a lot of things to put the house in order before inviting the investors, the global investors into India. Thank you for joining me on the show, sir.
Thank you. Thank you so much. It was a pleasure talking to you.